If you're new to cryptocurrency and finding it confusing, this video is perfect for you. When I first started with crypto, there were things I wish someone had told me. In this video, I'm going to share those things to help you do well in your crypto trading. You'll learn the basics like how to buy and sell crypto, how to pick the good coins, figure out how much money to put into each coin, and finally, I'll teach you a strategy to know the right times to buy and sell these cryptos. Before we dive into the content, subscribe to our channel and hit the bell icon for notifications. Your support means a lot, and it helps us create more valuable content for you. Now, first step, buying and selling crypto can seem complex at first, but it's actually quite straightforward once you understand the steps. Let's break down this process into separate parts for clarity. 1. Sign up to a crypto exchange. First, you need to register with a cryptocurrency exchange. There are many safe and reliable exchanges available. In this example, we're using Bybit. After signing up, you deposit money into your account on the exchange. 2. Navigate to the buy-sell section. Once your account is funded, find the section of the exchange where you can buy and sell cryptocurrencies. 3. Understanding different types of purchases. There are various ways to buy crypto. One common method is spot trading. Spot trading means buying the actual cryptocurrency without using leverage. 4. Execute a spot trade. Go to the trade section and select spot trade. You'll see a platform with various options. Don't get overwhelmed by all the information. Ensure you've selected the right cryptocurrency, example Bitcoin. Look for the spot option to confirm you're doing a spot trade. 5. Placing an order. Under order price, you can set the price at which you want to buy. To buy at the current market price, leave the settings as they are. You can specify how much you want to spend either by using a slider or by typing in an amount. For a limit order, buying at a specific price, use the settings you've adjusted. For immediate execution, choose a market order. 6. Completing the purchase. Once you decide on the amount and type of order, click Buy. Confirm the details and complete the purchase. You now own cryptocurrency, like Bitcoin, in your spot wallet. 7. Viewing your assets. To see your holdings, go to My Assets and select Spot. This section shows your current cryptocurrency positions. 8. Transferring between accounts. If you want to move funds between accounts, e.g. from spot to derivatives, use the transfer option. Select the accounts you're transferring between, specify the amount, and confirm the transfer. By following these steps, you can effectively buy and sell cryptocurrencies on an exchange. Remember, it's important to understand each step to manage your crypto assets effectively. Now, second step, in this segment of the video, I'm going to show you how to choose the best coins when it comes to making your decisions of which ones to get into the market on. So if you have a look over here, I'm using CoinGecko. Now you can use other platforms. Another big one is going to be CoinMarketCap, but I just like CoinGecko. There's not really any real difference. It gives you a whole list of different coins over here. You're also able to create portfolios. So if you want to go through to portfolios, you can save coins over there on your watch list, which you can monitor going into the future. Now, you're actually able to take this platform to the next level and really use it like a professional. And this is typically the way that I do it. You'll notice that as you progress into this bull run, you're going to pick up a lot of different calls and information from other influencers. People are going to start to say, buy this coin, buy that coin, it's going to go up 100 times, it's going to go up 1,000 times. And I want to give you one tool that I wish I knew when I started with crypto, which will show you how to prove whether this is going to be a good coin to get into or not. And simply put, it's by pivoting the chart and looking at it in terms of Bitcoin valuation as well as in terms of Ethereum's evaluation. So, I'm going to start over here with this coin, Decred. Now, Decred was a big name coin back in the prior cycles, all the way from 2017. And when you click on that, you can see the current price. You can go down over here and you can actually see a price chart. And surprisingly, it actually did pretty well. Now, it went all the way up to $117 in 2018, and then in the next cycle, which was 2021, it went all the way up to $207. This is actually not typical of what you expect in a bull market. Usually these coins fail to put in a higher high in the following cycle. Now, what's important about this is, you may look at this thinking that, well, This is a super strong candidate, and you should be buying and holding this for the long run. But this is where the magic comes in. I want you to go through to the top section over here and click on the settings, and then you're going to pivot and change the currency into Bitcoin. So under that, you'll click over there. BTC, change that through to Bitcoin. Once you click on Bitcoin, it's now denominating it in Bitcoin terms, which means it will show you, is this coin better to hold than what Bitcoin is? Or should you rather just be holding Bitcoin or looking for something stronger? Well, if you scroll down and you have a look at the actual chart, it tells you everything you need to know. And this is the story, right? It did perform well against Bitcoin in 2017 and again in 2018. But ever since then, it's just been bleeding out against Bitcoin, losing in its Bitcoin-denominated terms, which means that you would have been better off just holding Bitcoin. So, although when you look at the USD value, it looked pretty good, and you might even think to yourself, right now, this is something to hold. It's telling you a different story in Bitcoin terms. You're actually losing money, and you should rather be holding Bitcoin. Now, of course, you can do exactly the same thing when comparing against Ethereum. And the reason that we do this is simply because Bitcoin and Ethereum are the blue chips of the crypto market, and they're ultimately going to be your safer bets. So, if we move over here to Ether and we click over there, we're now measuring in Ethereum terms. And you're seeing very much the same picture over here. In Ethereum terms, it continues to bleed towards the downside, thus proving and showing you that you're better off just holding either Bitcoin or Ethereum. Now, what about an example of a strong coin? What should that chart look like against Bitcoin and against Ethereum? One coin that I can think of, which is outperforming the majority of coins in this cycle, is going to be Casper. So if you have a look at Casper over here, I'm going to, again, move the settings into USD. So we'll have a look at USD. If you look at it here, we'll put it on the max time frame. You can see this chart has literally just gone up. But what about against Bitcoin? Has it gone up against Bitcoin? Well, you can find out for yourself by changing the currency again to BTC. Once you move that to Bitcoin, over there, you go back, have a look at the chart over there, and you can see in Bitcoin terms, it's outperforming the market completely. This is a strong one, which you would have wanted to hold. Let's go look at Ethereum, just to double confirm that it is outperforming Ethereum as well. So, if you have a look at this chart of here, this is a prime example of the types of charts that you want to be buying, because it's outperforming Bitcoin, Ethereum, and the US dollar-denominated currencies. So, it's a good one for the long run. So, the third point I'm going to show you is how much money you should be allocating into each of these different coins. Now, this is something that even your top-tier celebrities do not understand, so pay attention to this one. It should really change your perspective on the market, and I think it's a valuable piece of information which will take you a long way. So, if you have a look at the chart over here, again, we're looking at CoinGecko. The same info is going to be on CoinMarketCap, and you can see all these different coins, right? You can see Bitcoin is at $40,004. You also have Ethereum shortly after Bitcoin over there. And that means that ultimately these are your strong blue chip coins which are unlikely to sell off 99% in a major dump. So if you scroll all the way down to the bottom, you'll see I'm at coin 332, and this one's market cap is $107,670. What does that mean? Well, simply that means that if one player comes in and puts another $500,000 into this position, over here you would have doubled this coin's market cap. This means that the coin can go parabolic if a lot of money flows into the market, but the inverse is also true. If big players start to dump these coins, a sell-off of just $100,000 worth of these coins can drastically decrease their value, potentially going down 99% from here. This illustrates the importance of controlling how much money you're putting into different coins. When you see a coin promoted on YouTube, Twitter, or Instagram, do your research. If the coin is under a $1 million market cap, that is extremely low, considered a micro cap. Typically, safer plays are coins with a $1 billion or higher market cap. Structuring your portfolio depends on your risk profile, which varies based on age, background, and responsibilities. For a safer approach in crypto, allocate 80 to 90% of your portfolio into the top 10 coins by market cap, as these are less likely to experience drastic drops. Those seeking more risk and playing with money they can afford to lose might look towards lower market cap coins, potentially allocating 30-40% to these and 60% to the top 10 coins. So now let's get into the strategy. The first thing that you're going to need to do is get a TradingView account. Once you type in TradingView into your browser, you'll come through to a screen that looks like this. They are currently running a special. Next, you're going to look at the search function over here. Type into the search section, go from people, and move it over to symbols. Then you're going to see a whole lot of different options. Type in the ticker, which is BTC for Bitcoin, and then we have USD. You can see it shows you all the different exchanges. It depends on what exchange you're trading on. Typically, you want to select the chart that's in line with that exchange. I've been trading on Bybit, so I'm going to go through and look for the Bybit exchange. Now that I have it, I'll say Launch Chart and click on that. That will bring me through to the chart. For this strategy, we're going to be using the daily time frame. On the top section for Bitcoin, you'll click Daily, so it moves through onto the one-day time frame. Here you can see Bitcoin's recent price action. Next, you need to type in the EMA level. Type in Moving Average Exponential. Click that twice and it will ultimately put 2 of those onto your page. Now you want to go through to this and change the settings. We're using the 21 EMA, which I'm putting in black. On the other one, we're using the 50 EMA, which I'm putting in blue. Now that you have the EMAs on your chart, this is how the strategy works. Remember, we're on the daily time frame. We have the 21 EMA in black and the 50 EMA in blue. The EMAs will help you to time your entries and understand when the price action is moving in an uptrend versus when it's moving in a downtrend. You want to buy as the uptrend begins and ride the momentum to the top, and then when it starts to turn back down, you want to sell into the downtrend and exit the market. As price started to get above the EMAs, it pulled the 21 EMA above the 50, which we call a golden cross. This happened at a price point of $1,000 and would have held you into the market all the way through. The criteria to confirm whether you can stay in the market is as long as the price is above the EMAs and the EMAs are angled towards the upside and continuing in that fashion, you hold your long positions. So, that's a buy signal. You stay in the market and hold that all the way to the top. You can see price doesn't ever go back below those EMAs, and they don't turn down. The first candle where it crosses to the downside occurred at $49,800. The criteria for exiting, the candle comes down, starts to roll those EMAs over. The 21 crosses below the 50, and the price is holding below that level. Once the cross occurred, that's your signal to exit the market. Then we move into a bear market. Hope you found clarity and understanding in every part of this video. Don't forget to subscribe, like, and hit the bell icon for more. Thank you for watching and see you in the next one.